Hey, it's Michael Saul, but everybody calls me Tiny. This video is The Selling Isn't Over, plus a Bitcoin update. This is stock market analysis for the week of April 2nd, 2018. Happy Passover, happy Easter, happy Sunday, whatever you're celebrating or not celebrating. Hope you had a wonderful weekend and a great trading week. Let's take a look what happened in the market. So, volatility has started to kick up, and I sent an intra-week update last week, talking specifically on Friday that I believe that lower prices are going to be seen sooner rather than later, but we may get a stay of execution, as I called it, on Friday because it was pre-holiday, which usually has a bullish tendency, and it was end of the month, which also has a bullish tendency. But if you look at this pattern here, and I have these blue lines highlighting a possible triangle. Now, why isn't it a confirmed triangle or already a triangle? Why is it a possible triangle? Well, because you could connect any 2 points together you want in order to get a trend line, like these two, or, then that's obvious because that's close to each other, or like something like this up here, or that connects more. Or how about, we'll do something like this. I don't know why I'm really showing this because it really doesn't matter. The proof is, that to that. So you could connect any 2 points. Okay, the key is one of the lines on a triangle has to connect 3 points for the triangle to be valid. Not both lines don't have to, but you see here, and this is one swing point. So I know it's like, oh no, well that's 3 lines, that's 3 connectors. Sorry, 1, 2, 3, but this is actually one swing point. So 1 swing point, 2 swing point, 1 swing point, 2 swing point. So this is just an estimate of a triangle, but I'm not looking for picture perfect, how it has to look perfectly in the book. I'm just trying to judge what the market is saying based on the pattern. And a triangle is a consolidation pattern. So, in my opinion, this can go one of 2 ways here. I believe it's going lower, okay, but it's either going to go lower from here, it's going to coil up here and break down here, or it's going to continue to fill out, form a triangle, and then break. I would like to see it do the second option rather than the first. And why? Well, option is a key word because it has to do with options. All right, right now, premium on options are jacked because volatility has spiked. But if the market starts moving up and coils and chops around and churns, the volatility will subside and option premium will come down. This way, when it breaks, okay, you can, a couple of ways to trade that, and I save that for the premium membership or whatever, but in this way, you'll be able to get cheaper options. And when I mean cheaper, I mean based on volatility, not so juiced up with volatility. But right now, puts are juiced up because of the increase in volatility. Are they crazy? No, they're not crazy, but they're still higher than I would like them to be. And you can see the VIX is under 20. All right, so to me, above 30 is considered a quote-unquote volatile market. One of my rules is swing trades are half size when the VIX is over 30. But, so it's still under 30. There's no bullish or bearish number despite what some will say or some will try to tell you. But, I mean, even though I want the second option, it doesn't necessarily mean I'm going to get it. Okay, I can't will the market. All I can do is react to what it does, and you can see here, I have to kind of fit this in here, we're forming a little coil on the bottom of this possible triangle. Okay, now coils are different than triangles. Triangles actually have these nice wide swings, but coils are more tightened, overlapping candles like this. So we may just coil up here and break right down. All right, I still believe this low is going to be taken out. No, I do not believe we will be entering a bear market, but that doesn't mean that we can't go lower. Okay, a lot of people, I get emails, oh, you're just a perma bear. I'm like, what are you talking about? I've been bullish for years, number one. Number two, I haven't switched too bearish here. I just think that this correction is not over. This pullback is not over. Okay? So if we do a measured move, and this move down is going to equal the next move down, let me grab this. The target would come in right around here, which is right into this multi-month balance right here. Okay, some nice support zone here, a nice demand zone, whatever you want to call it. So it's a nice area. It's in the 247s area. I may be a little off with the measurement. Doesn't matter. I'm not looking for exact numbers. Okay, matter of fact, I am a little off because you could see I'm just looking for a zone. Yeah, it's high 247s. Doesn't mean it has to end exactly there. Okay, don't even know if this line is perfect. It's not the point. All right, all I'm looking for is a zone to watch for if I'm short, to look to move protective stops, or if I'm looking to go long, to watch for a pattern to lean against. So that's what I'm seeing in the S&P 500. Like I said, we're either going to try to break from here, or we're going to continue to fill out this triangle and then break. Now, what if I'm completely wrong and we go higher? Okay, but again, we have to break out of the triangle, at least the blue line, and probably this last high, right? If we take out this last high over here from the middle of March, then it's suggested we're going to new highs. Okay, but right now, it looks like this correction is not over. There's a lot of news. The tariffs are good, they're bad, they're bad, they're bad. No, they're not that bad, whatever it is, and a whole bunch of other stuff going on, and it's making the market a little bit nervous. You can see this nice strong uptrend is now met with these volatile swings, and that can often be the sign of change coming. Again, I'm not looking to call a bear yet. Right now, I'm just looking for us to take out the February lows and go to at least the measured move. Then we'll see what happens. I also think there's a chance that we will have a nasty time in the second and third quarter. It is midterm elections, and this tends to be the weakest time of the cycle. So I wouldn't be surprised if we have a good solid sell in May and go away, but it's a month away. All right, it's only April 1st. You may even be watching this on April 2nd. So it's still a little bit to go until we're looking at sell in May and go away. But the blue lines are suggesting a triangle. The fact that we held the 78.6 of this and then the 78.6 of this really favors that this is a triangle. But again, let's see what happens. I am leaning to the downside for a continuation of the pullback that started here, corrected here, and resumed here. Not calling a bear market here. Okay? All right, great. Here's the Dow. Still holding the 200-day moving average. Similar, nice coil. We want to see if it breaks. Does it break through the 200-day moving average? Here's the Russell, held the 78.6. If that breaks, you got the 200-day and then the February of those there. Here's the mid-caps, also, same deal. And here's the Nasdaq, which has been acting okay, stronger. But if it breaks this level here, look for a retrace to February lows and also the 200-day moving average. Let's look at some stocks. Tesla. Yeah, Tesla in trouble with the bonds and also with the car that killed somebody in Arizona. And, look, don't get me started on autonomous driving, all right? I've had debates with friends, with acquaintances of friends, and with friends of acquaintances, with a lot of people about how this is not the future that everybody thinks it is, all right? I do believe that self-driving vehicles will have a place in America, will have a place on the road, probably across the world. I don't know why, but I'm talking America because that's where I live. But I do not believe, as some do, that it will replace cars as we know it. Okay, owning a car produces a visceral feeling in a lot of people. Yeah, city folks, right, yeah, you know what? They could do without cars. They could do, New York City, $75 a day to park, or whatever ridiculous amount is, or even other parts, right? Not just New York, and it's all crazy, and accidents and high insurance rates and all that, great. Yeah, those people would rather not own vehicles. Okay, but most other people, and even people in the city, you hear people go, look, if people in the city didn't want to own vehicles, there would be no freaking parking garages in apartment buildings. You'll hear people say, I got to have my car. Right? They want the control, and owning their own car is just another way to have that control. So the fact that driverless cars is going to replace I think it's ludicrous. And it's certainly not coming, in my opinion. It will not be 100% penetration, certainly while I'm not alive, and probably not while my kids are alive. I mean, maybe in a couple 100 years or 120 years or whatever it is. Whatever. I just don't see it. And granted, I'm not always the one with the biggest outlook and how the future is going to look. I just driving is such a big part of, it's a coming of age kind of deal, owning a car, working on cars. People love their cars. I have a friend who owns a bunch of all older cars, and I don't mean like 1950s and 1960s stuff. I mean stuff from the 80s and even the 90s, and he's always going to auctions. He just bought like a 2006 Honda Ridgeline. I mean, he loves this. He loves it. He loves getting the deal on the cars. He loves driving them. He loves getting them fixed. So and that's just one example. All right, a lot of people it's freedom. When people get their driver's license, it's a sense of freedom. I just don't see that being the same. I don't see that being fulfilled with driverless cars. But that's my opinion. You can leave a comment and let me know what you think. All right. Anyway, Tesla. Tesla held 250. There is some support a little further down in the 242 area. I don't think Tesla is going directly to zero, but it does seem like it's in trouble. I would wait for a bear flag. The Goog, okay, Alphabet, held the 200-day moving average. See, this is also getting volatile up here. It wasn't as tight as like the S&P 500, but you could see what happens when it gets volatile. It could lead to more of a chop as it consolidates, or it could continue on the downside. There's all privacy stuff going on. Brings us to Facebook in a couple minutes. Here's Amazon. President Trump tweeted that he doesn't like the tax breaks that Amazon is getting, and a lot of people, of course, the media spinned it into he hates Amazon. I don't know if he hates Amazon, but he does talk about it putting a lot of thousands of businesses out of work and out of business, which leads to more people being out of work and all that. And he's not wrong. Okay, Amazon is dominating in a lot of industries, a lot of niches. I don't know if he necessarily hates them, but and they do have different tax advantages than other companies, so maybe that's going to change. But anyway, it was enough to definitely put some pressure on the stock, but a nice reversal on Friday. Let's see what it does here. Does it come up in bear flag? Does it form a consolidation? Or is that going to continue to go down? Facebook, with privacy issues, and now Zuckerberg has said that he is going to testify in front of Congress. How nice of him. But you can see here it came down. I highlighted this level last week, and it came down, tested it, and held. So what's going to happen here? If it bear flags up and it breaks through this level, look for a test down here at 145. And then from there, you have support at previous resistance at 133.84. That would be a nice shot from up here at just under 195. That would be a pretty nice shot. It's already seen a pretty nice decline. Apple. So Apple dipped down. Everybody's getting nervous. It's leading the move down, but no, it's not. It bounced back to new highs. Now it's at the 200-day. So if it breaks through the 200-day, if the market does get a little smacked here, watch for the February lows to get tested. Caterpillar, okay, possible triple bottom here. If it breaks, watch the 200-day moving average as support. Same thing with John Deere. How about bonds? Well, bonds started to rally as the market getting a little bit of the jitters, but I don't think it's going to go past the 200-day moving average. It looks a little bit exhaustive already up here. Bonds do not have to always move opposite the market. Don't believe that. So let's see what it does from here. Gold. Yeah, gold is, in my opinion, not the spot where I would like to jump in just yet. Could be in a bull flag, but to me it's more of a range. Let's see where it goes from here. And oil busted out of the triangle we looked at, came to the highs, and I'm now stuck here. Go to the weekly chart here. Could be setting up for a potential move up to the 200-day on the weekly, which is also corresponds with this low from 2015, March 2015, at 1561. Watch that as next possible resistance. Okay? So that's my take on the market. We're going to look at Bitcoin in a second. But just a review, I think that we're going to go lower. Two scenarios: we break down from here, or we continue to form this triangle and then break. I would prefer the second scenario. Doesn't mean it's going to happen. It doesn't mean it's going to happen just because I would prefer it. Volatility is kicked up a little bit here. It'll kick up if it breaks, because you'll likely see some program selling, especially if we give up the 200-day moving average. But I expect it to break the February lows. And again, not turn into a bear here. Just do not think this is over. All right, let me get the Bitcoin chart. All right, so Bitcoin has been getting hit a bit. Had this triangle. It broke down out of the triangle here. Or more of a coil, actually, because that's really not a triangle. It's more of a coil. Broke just like this one. Broke down out of it. All right. The minimum target is over here from November of 2017, but measured move just using this in and this out. Okay, and we could do bigger moves. We could do this move down up to this move. Okay, and I'm just using these blue dash lines. That brings it down to just south of 3,000. But I think at a minimum it's going to go to this low here, which is whatever that low is, 5,600s. I think it's going to break it. I don't think it's going to stop dead at that number. So I am still bearish on Bitcoin. Still don't own any, not short any. Haven't traded it. Haven't traded the futures. I'm still in wait and see mode here. And when I'm really in wait and see mode here is if I am correct and we are going to go lower, what's going to happen? Is everybody just going to dogpile out of it and then it'll lose its luster? That's when it can really put a nice rally in. Or are people just going to continue to make excuses? I mean, the stuff I heard, there's no way it can go down. It's the most ridiculous things I've ever heard. All right. Of course it can go down. Of course demand can dry up. And that's exactly what happened. In my opinion, cryptocurrency speculation will be one of the greatest decimation of wealth we have ever seen. Just yet another bubble. All right. That's it. Website should be up this week. I know I said that last week, but I'm still working on a couple of things and still getting some things together on some offers where I can help you out, because I'm getting a lot of questions about doing individual coaching, which I only accept a few members each month with, and joining the private community, which I've so far capped because I do everything myself. I do all my support. I do all the research and all the publishing and all that stuff. So there's only so many people I can handle, because as part of the private community, you do get access to ask me questions and get me on the phone if you need me. All right. So anyway, I'll have more details on that coming soon. Have a great trading week, and I will talk to you in next week's video. Or if you're already on the email list, I'll talk to you in the intra-week videos. Intra-week emails. Have a great week.